What's going on, guys? How are you? How are you doing? This is Shocks, and this is Limitless Shocks YouTube channel. It's good to have you back, guys. Today we're going to talk about how to master the JPY pairs, how to trade the GBP JPY, the Euro JPY. So we're going to go deep on how to analyze technically these two pairs and how to trade, how to be successful trading these pairs exclusively. This is Shocks and welcome back. If you are new to the channel, guys, subscribe, turn on your post notifications so that you don't miss out on any smart money concepts, BTM and institutional trading information. Let's get it rolling. So guys, what we are doing here is we are having the two GBP pairs, the two JPY pairs, pardon me, with the two JPY pairs. So remember, we did a video long back explaining how to trade order blocks the right way, and we were talking about how to not trade order blocks each and every time, on not trade per se, how to not expect order block retest at each and every time. So what we are doing is we have the EJ, the Euro JPY here, and what we are doing is we are trying to trade the EJ and the GJ. So what we are doing is we have the order block, right? So point number one, before we go any further, if you are trading these two pairs, you have to understand that they trend. When they trend, they trend. These are trend pairs. They follow the trend and they trend for a long time. So we're going to use the H1 for our examples, and you can be using also the H1 for your trades. So these pairs, they trend and they're very good if you are looking for higher risk to reward ratios, because you can hold for long hours or can hold for even days and things like that. So what we're going to do is we're going to explain how to then trade a trending pair. So we have the EJ here. We will talk about the EJ, then we'll go and talk about the GBP JPY as we go. So the EJ, as you can see, we're looking at the H1 pair from 25 May this year to around 9 June, and if you can look at this chart alone, you can see that the pair has been trending for days and has been trending for days. If you can see, we have been rising for 1 2 3 4 5 6 7 8 9 11 days, rising one direction. So what you can do is you can even hold for only 3 days and you can make a lot of money. So what we are saying is, when we retest an order block like this, so when JPY pairs move, let me just say JPY crosses, right? JPY crosses, they move like this. They follow this pattern where they retest an order block like this in this area. The next move, they are not going to retest that order block because they are trending. They are going to retest a flip zone. So this is where that notion of break and retest comes from. So we are going to break a high and we are going to retest that high, and next time we are not going to do the flip zone entry, we are going to do the order block entry. So it oscillates between order block and flip zone, order block and flip zone. If you look at it, you understand what I'm saying. So after that, we can see that we have this flippy. Then after that flippy, what do we have? We have this order block, and we'll be expecting price to retest that, and we have the flippy. So when you are marking out the Euro JPY, you are going to mark out the flip zone and the order blocks, the flip zone and the order blocks, the flip zone and the order blocks. And guys, don't forget to subscribe to this channel. And as I was saying, the flip zone, the order block, the flip zone, the order block, the flip zone, the order block. So these horizontal lines are marking the flip zones. And if you can clearly see, if you can see here, it's a flip zone and an order block. So you can be setting your limits or entering manually. So guys, let me give you another tip. When you're trading this space, it's better for you to enter using a limit. Why? Because a limit gets you in the market at the best possible price. You don't have to enter at market price. Why? Because it delays your entry, and your entry is going to be mediocre. You don't want mediocre entries. And with that in mind, let's just get rolling and know that we are going to be using our limits. If you set your limit and your stop loss, you'll just be looking at price as price goes, and you are not going to be having any emotions whatsoever. So now when price then breaks remember what I said when the video was starting. I said EJ pairs, GBP, JPY, the JPY crosses, they follow a certain trend. But when they follow a certain trend, they don't retrace deeply. Since they don't retrace deeply, it means if we are in an uptrend, we are not going to be breaking any lows anytime soon. When we are trading the EJ, when we are trading the GJ, we are not going to be breaking any lows, and we are going to be going up if we are going up, and we are going to be going down if we are going down relentlessly. You understand what I'm saying? So when you see a low like this being taken out, it's a change of character. If a change of structure, it's a change of a trend. What do? You align yourself with the new trend and move to the move with the market. You get yourself in sync with your friend. Who is your friend? Your friend is your trend. Understand what I'm saying? So that's what you are doing, and you will be marking the flip zone, the order block, the flip zone, the order block. So it's a new song. We can actually record the song like flip zone, order block. I'm just saying. So that's the pattern, and that's the sequence that you should be following. Break, and this is the order block retest. And you see, this was a trade that we actually predicted, or predicted is not the right word, maybe forecasted. Yeah, it's kind of sophisticated, right? So we break another low here. So let me tell you another secret. When you're trading this thing, they trend, which means they don't accumulate for longer periods. If they do, it means they are not moving. When they move, they have to clear out the accumulation. What do I mean by that? You see, we have this move, right? Then it accumulates like this. It accumulates like that. Do you see that accumulation? It accumulates like that. When it accumulates like that, it means the next time they're going to break this trend line, they're going to go back to where the accumulation would have started from. So that's another thing that you should know and that you should notice on this pairs. It looks something like this. You see, break, retest, and they are going to go right to where they started. And when you are trading at these pairs, you have to be very patient. Don't be entering the market for minutes. Please learn to hold for at least 2 days. When you're trading these things, they move. If they move, you have to maximize your profit, minimize your losses. So the loss, they have to be immediate feedback, and you have to know what you're doing. If you know this, you will know you won't mess up. This is the flip zone. You see what I'm talking about? And this is the order block. Do you see what I'm talking about? You enter here, hold for 2 days, you'll be here at the end of the day, and that is some profits, if you know what I'm talking about, right? If you know what I'm talking about, just write in the comments box. Just write, I know what you're talking about. Just write in the comments right now. Pause the video, write, I know what you're talking about. Then I know we'll be on the same page. I know we're on the same page. Understand? So another trend starts here. Break of a what? Of a high. We break a high. What do? We retest a what? An order block. Retest an order block, and we go hold for at least 2 days. And you see, from here to here, you'll be okay. Let's measure these things. Let's measure. If you enter here, you'll be risking something like 35 pips, and you'll be going for something like 184 pips. I don't really know how do we calculate the risk reward ratio there. 185 divided by 35. You can punch your calculator and see, but I know it's a very healthy risk to reward ratio. And the next trade is going to be at the flippy. At the flippy, you enter here and your stop loss goes just below these manipulation pins. And let's just say you set your order here and your stop loss is 30 pips. You are going for something like 197. I know it's more than 1 in 3, and that's good enough for me. We have this one again. We have this one, right? We have 30 pips stop loss. So remember, we just want 190 for 1 in 3. If you see 180, 190, it means it's 1 in 6 already. And that kind of a risk to reward ratio will make you some money. And guys, don't fall for those 5 pips stop loss, things like that. Those things don't really work. You understand? You have to give the market the room to breathe. You understand? Room to breathe. Don't just do what everything you see on YouTube. But you can do what I'm telling you, but you understand what I'm saying. Okay, guys, that's just something. So we continue doing that. That's a flippy zone. You understand? This is a fair value gap that you could have gotten involved in, and this is another order block that you could have taken advantage of. And if you measure this again, your order blocks are around 30 to 40 pips. Let's just say 20 to 40 pips. So which means that's your risk. If you want to reduce this risk, it's up to you. But guys, my advice, since you're holding for 2 days, just hold. Just put your 30 pips stop loss and hold. You understand? If you held for 2 days here, it means you're going for 400 pips. And I tell you, that's some money. And remember what I told you, if you see it consolidating like this, it means it's not yet ready to break out. So when it breaks out, it's going back to where it started from. So we are looking at this thing going or coming back or retesting this order block in this area. So this is how you trade EJ, and you'll be right. Then when we talk about GBP JPY, as I told you, the GBP JPY pair, the JPY pairs, the JPY crosses almost move the same way, right? So if you look at this point and this point, you see it's been trending up for what? For days. Same as those structures I was showing you for what? For EJ. So even if you look at other JPY crosses, they are going to show the same transcript, right? So here what you do is you just follow market structure. Remember, you are only concerned about 2 things. You are concerned about order blocks, and you are concerned about what? And you are concerned about flip zones. So here we have an order block, a fair value gap, a flip zone, and then we have price breaking this. This is some sort of resistance, a very strong resistance. It breaks. So this is a break and retest. So if you look at this, this is more like a shrinking triangle that you can use. So you are getting your entry here. And remember, as I said, you have to hold for days. You have to hold for days for you to see some progress trading these things. You have to hold for days. And this is it. You have your order blocks. You have another order block here. You have an order block. You see, this is how you are looking at these things, and you have to have a high level of patience. You have to wait for these setups, and you have to be very, very, very sharp when it comes to these things, which means you can also be using limits. Don't be using market execution, because market executions are not that friendly when it comes to getting tighter entries and very good ones on that matter. So what we are saying is we are going to be looking at this, and it's trending most of the times, and this is what you want to see, trending most of the time. So if you trade GBP JPY and Euro JPY, you are going to find mostly similar trades, and you are going to be very happy because you'll be trading, you'll be focusing on this, and you'll be waiting. Look at this. This was a strong support region. It breaks out and it comes back to retest this order block, you see, and you hold for 2 days. If you hold for 2 days, look where you will be. So don't be greedy. Look for the signs, and enter confirmed trades, confirmed setups. So look at this. Break, retest. So this is remember, when you are trading flip zones, you have to look at a fair value gap just below the flip zone or just above the flip zone, depending on which direction you are going. So this is a fair value gap just below the flip zone, right? So this is where you are getting your entry from, and you're just going to follow the same things, right? Order block, flip zone, order block, flip zone, order block, flip zone. It's more like a sequence that these pairs follow. So if you want to to know more about these things, if you want to know more about these pairs, you just go on your charts, just study them, study as minute, and be waiting for proper ones, So the best way to wait for your trades is to put limits, wait for your trade, put limits, and you will never go wrong. Guys, this is me, and this is my view on how to trade JPY crosses and how to trade JPY crosses. If you got something, just tell me in the comment section below that you got something from this. It gives me energy to keep bringing this type of content to you. Trade what you see. My name is Shox, and I'm out.